I'm Wade Johnson, partner of Cutcher Neale Wealth Management, and I'm joined today by our portfolio manager Ryan Thompson to provide you with a market and portfolio update for the March 2026 quarter. The first quarter of 2026 marked a more challenging start to the year for global markets. After a strong run previously, equity market performance became more mixed, with returns diverging across regions and sectors. Investor focus also shifted. Concerns around inflation, interest rates, and the broader global backdrop moved back to the forefront. Global equity markets were mixed over the March quarter. In the United States, markets declined following a strong run. The S&P 500 fell 4.3% and the Nasdaq declined 7%. Weakness was concentrated in large cap technology and software stocks, reflecting concerns around AI disruption and the sustainability of elevated capital expenditure. By contrast, energy and utilities outperformed, supported by higher commodity prices and more defensive positioning. European equities were more resilient. The Stoxx Europe 600 finished only slightly lower, down 0.9%, while the FTSE 100 rose 3.4%. That said, performance softened later in the quarter as uncertainty increased. Across Asia, markets were broadly flat to weaker. Early strength in technology-driven markets such as Japan and Taiwan was offset by a sharp sell-off in March. The quarter also saw a clear shift in market focus towards inflation and global risk. Escalating conflict in the Middle East disrupted energy supply through the Strait of Hormuz, driving a sharp rise in oil and gas prices and complicating the inflation outlook. This led investors to reassess global monetary policy expectations and contributed to higher market volatility. In the United States, economic conditions remained resilient, supported by consumer spending and solid earnings expectations. However, persistent inflation and mixed labour market signals saw the Federal Reserve adopt a more cautious stance. Expectations for further rate cuts were largely unwound. In Europe and Asia, early signs of stabilisation gave way to a more uncertain outlook as higher energy costs and tighter financial conditions weighed on growth expectations and investor sentiment. Closer to home, Australia's economic backdrop remained relatively resilient, but the environment became more challenging. Growth improved modestly into late 2025, but household consumption remained uneven, while inflation pressures persisted across key areas such as housing, electricity and services. While headline inflation eased slightly, underlying measures remained elevated, reinforcing the view that inflation is proving sticky. Higher energy prices added to that pressure, lifting near-term inflation risks and weighing on both consumers and businesses. In response, the Reserve Bank of Australia continued tightening policy, lifting the cash rate to 4.1% during the quarter. While the March decision was more finely balanced, the overall tone remained cautious, with the board signalling that inflation risks remained skewed to the upside. Bond yields also moved higher as rate expectations adjusted. This repricing, alongside heightened uncertainty, was a key driver of local equity market weakness over the period.
The Cutcher Neale International share model had a challenging start to the year, returning minus 6.07% in the March quarter. From a stock selection perspective, performance was supported by GE Vernova, Comfort Systems, Fujikura, Agnico Eagle Mines and SK Hynix. GE Vernova benefited from strong order growth, a large backlog, increased capital returns and ongoing demand linked to grid investment and data centre power. Fujikura also delivered an upbeat result, with profit growth and upgraded guidance driven by demand for optical fibre and cabling linked to AI-related data centre build-outs. The Cutcher Neale positive impact model also had a challenging start to the year, returning minus 1.21% for the quarter. Performance was supported by Comfort Systems, GE Vernova, Siemens Energy and GSK. Not owning Microsoft also contributed positively. Comfort Systems benefited from strong demand tied to data centres, cooling electrical infrastructure, while GE Vernova and Siemens Energy were supported by rising demand for power equipment, grid infrastructure and gas turbines. These businesses continued to benefit from growing investment across the energy, and electrification value chain. The Cutcher Neale Australian share model returned minus 7.68% in the March quarter. Our local share market was weaker over the period, giving back earlier gains as rising inflation pressures, higher interest rates and broader uncertainty weighed on sentiment. From a stock selection perspective, performance was supported by BlueScope Steel and Rio Tinto, as well as companies we didn't own, including CSL, Northern Star Resources and Aristocrat Leisure, which underperformed during the period. BlueScope Steel was supported by ongoing takeover interest, with the market continuing to assess the possibility of an improved proposal. The Cutcher Neale fixed income model began the year with a return of 0.42% for the March quarter. Global bond markets were weaker over the period, although the drivers differed across regions. In Australia, bond yields moved higher as the Reserve Bank continued responding to persistent inflation and a still resilient economy. As a result, the Australian 2-year government bond yield rose from 4.06% to 4.66%, while the 10-year yield increased from 4.75% to 4.98%. In Europe, bond markets were also pressured by a more difficult inflation backdrop, while in the United States, yields moved higher as markets materially reassessed the outlook for future rate cuts.
Over the March quarter, the Investment Committee adopted a more measured stance as the macroeconomic backdrop shifted. While the portfolios remained largely fully invested, positioning was adjusted to better align with the evolving risk environment. Higher energy prices and broader uncertainty have added complexity to the inflation outlook and increased uncertainty around global growth. In this environment, we remain focused on monitoring developments closely. As always, I encourage you to reach out to your Cutcher Neale advisor with any questions or to arrange a meeting. We'll see you in July for another quarterly update.